Welcome back to the channel. I'm Algabot, and today we're taking an educational look at an expert advisor for MetaTrader 5 called Close Location Pressure Trend. This is a trend-following strategy built around a clever, volume-free idea, where inside each bar's range price actually settled at the close. From that single reading, the strategy builds a smooth pressure line that tells you which side of the market has just taken decisive control. By the end of this video, you'll understand the indicator behind it, the exact entry and exit rules, the code that runs it, and a step-by-step chart walkthrough of both a long and a short trade. So what does this expert advisor actually do? At its heart is a measurement called the close location value, or CLV. For every completed bar, the strategy looks at the high, the low, and the close, and asks a simple question. Did price settle near the top of the range, near the bottom, or somewhere in the middle? When a bar closes right at the top of its range, that reading approaches +1, suggesting buyers absorbed every dip during that session. When it closes at the very bottom, the reading approaches -1, suggesting sellers stayed in control. A close in the middle reads near 0, which reflects indecision. Notice that volume is never used, which makes this reading clean on foreign exchange, where only tick volume is available. A single bar's reading is noisy, so the strategy averages CLV with an exponential moving average to create a smoother pressure line. A run of top-of-range closes pushes that line positive. A run of bottom-of-range closes pushes it negative. The strategy is watching for the moment that pressure surges freshly through a threshold, because that marks a regime where one side has just taken decisive intrabar control. On top of that, there's a trend baseline filter. The EA calculates an exponential moving average of the closing price and checks both its slope and which side of it price is trading on. The strategy only ever trades in the direction of that dominant drift, never against it. Risk is handled with a stop-loss based on the average true range, and the take profit is placed at a reward-to-risk multiple of that stop distance. It holds one position at a time per magic number, and the protective bracket manages the exit. This kind of approach may appeal to traders who are studying trend continuation and volume-free price action tools. Remember, this is educational information only, not financial advice, and all trading carries the risk of loss. Let's walk through the mechanics step by step. On each newly completed bar, the EA takes the bar that just closed and computes its close location value. The formula subtracts the distance from the high to the close from the distance from the close to the low, then divides by the total range. That gives a sign number between -1 and +1. A flat bar with no range simply reads as neutral 0. Each of those readings is added to a rolling buffer, and the strategy smooths them with an exponential moving average whose length is set by the pressure period parameter, which defaults to 10. That smooth value is the pressure line. To detect a genuine shift rather than a stale reading, the EA compares the pressure line now against its value 1 bar ago. Next comes the trend filter. The strategy calculates an exponential moving average of the close using the baseline period, defaulting to 50. It then measures the slope of that baseline over a number of bars set by slope loopback, defaulting to 3. For an uptrend, the baseline must be rising and the closing price must be above it. For a downtrend, the baseline must be falling and price must be below it. Now the entry conditions. A long signal appears when the market is in a confirmed uptrend and the pressure line makes a fresh cross upward through the positive threshold, which defaults to 0.15. In plain terms, buyers have just taken decisive intrabar control while the broader trend is already pointing up. A short signal is the mirror image. The market is in a confirmed downtrend and the pressure line makes a fresh cross downward through the negative threshold. Requiring a fresh cross, rather than simply an extended reading, is what lets the strategy aim for the moment control shifts, instead of chasing a move that may already be exhausted. Risk is defined before the trade opens. The EA measures the average true range over the ATR period, defaulting to 14, and multiplies it by ATR multiple, defaulting to 2, to set the stop distance. For a long, the stop sits that distance below the entry and the take profit sits above it at the reward-to-risk multiple, defaulting to 1.8. For a short, those are simply flipped. Only one position is held per magic number at a time, and from there the stop-loss and take-profit brackets manage the exit automatically. Let's read through the code you see on screen, just as it appears in MetaTrader. At the top are the input parameters. Pressure period is the exponential moving average length that smooths the raw close location value into the pressure line. Threshold is how far from zero the pressure must travel to count as decisive. Baseline period and slow loopback define the trend filter, while ATR period, ATR multiple, and reward risk shape the stop and target. Lots sets the fixed trade volume. Below that are the two trend flags. The uptrend variable is true only when the baseline now is above the baseline earlier and the close is above the baseline. The downtrend flag is the exact opposite. Then come the two cross checks. The bull cross is true when the pressure line was at or below the positive threshold on the previous bar and is now above it, capturing a fresh upward cross. The bear cross mirrors that against the negative threshold. The decision is a single if-else. When the market is in an uptrend and a bull cross has just occurred, the EA calls try enter for a long. When it's a downtrend with a bear cross, it enters short instead. In the long block, the entry uses the ask price. The stop loss is placed one risk distance below, and the take profit is placed at the reward to risk multiple above, then trade.buy sends the order. In the short block, the entry uses the bid, the stop loss sits above, and the take profit sits below by the same reward to risk multiple, with trade.sell sending that order. Both sides are perfectly symmetric. Let's bring this to life on the chart. Along the bottom, you can see the pressure line in gold, our exponential moving average of the close location value. It swings between -1 and +1, and I've drawn the positive threshold at 0.15 and the negative threshold at 0.15 below zero. On the price chart itself, the blue line is the EMA baseline, our trend filter. Look at the first couple of candles. Price is drifting sideways and the pressure line sits close to zero, right in that neutral, indecisive middle. Neither side has taken control, so the strategy simply waits. But watch the closes begin to firm up. On the second candle, price settles high in its range, and by the third candle it closes right near the top. That run of top of range closes lifts the gold pressure line. And here on the buy entry candle, it crosses freshly upward through the positive threshold. At the same time, notice the blue baseline has turned higher and price is trading above it. Both conditions are now satisfied. A confirmed uptrend and a fresh pressure cross. That's where the buy entry marker appears. From there, the market does exactly what a trend trader hopes to see. Each following candle prints a higher high and a higher low, closing strongly near the top of its range, and the pressure line keeps climbing deeper into buyer pressure territory. Price runs steadily upward until it reaches the take profit target, where the reward to risk bracket closes the long for an educational 1.8 multiple of the initial stop distance. The stop, by the way, would have been resting an average true range multiple below the entry the whole time, well beneath the swing low. Now the character of the market changes. A couple of candles later, price stalls and begins closing lower in its range. The pressure line rolls over, sinking back through zero. On the sell entry candle, price closes right near the bottom of its range, and the gold line crosses freshly downward through the negative threshold. Meanwhile, the blue baseline has peaked and turned down, and price is now trading below it. Again, both conditions line up, a confirmed downtrend and a fresh downward pressure cross. That's the sell entry marker. From that point, sellers stay in control. Each candle closes near its low, printing lower highs and lower lows, and the pressure line drives deeper into seller pressure territory. Price falls steadily until it reaches the take profit target below, where the short is closed at the same reward to risk multiple. For a short, remember, the stop loss would have been sitting in average true range multiple above the entry, just over the swing high. So across this single chart, you've seen the full symmetry of the strategy. It waited patiently through indecision, entered long only when fresh buyer pressure aligned with a rising baseline, and entered short only when fresh seller pressure aligned with a falling baseline. Each trade carried a predefined stop and a defined target from the very start. Of course, not every signal on real markets behaves this cleanly, and losses do occur when a fresh cross fails to follow through. This walkthrough is an illustration of the logic for educational purposes only. And that brings us to the end of our look at the close location pressure trend expert advisor. We covered how the close location value measures where price settles inside each bar, how an exponential moving average turns that into a smooth pressure line, and how a fresh cross of the threshold, combined with an EMA baseline trend filter, defines both the long and short entries. We also walked through the ATR-based stop and the reward-to-risk take-profit that manage every trade. Everything shared here is educational information only and is not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, leave a comment with strategies you'd like explained next, and subscribe for more MetaTrader 5 analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.